Mic check, mic check. Yeah, buddy.
Jesus Christ. What? This one.
All right, about to get started here in about 30 seconds or so. All right, let's do it. Today is August 3rd, Tuesday, 12 o'clock Eastern Time. It is time for your prop trader market update, hosted by me, Derek Oldensmith. Quick disclosure here. I am an associated member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Quick position disclosure. I'm still long. I got a question in the afternoon meeting yesterday, which, by the way, was an afternoon meeting that I broadcasted onto YouTube, so I hope some people caught it. I'm going to try to do that a good bit more regularly. Just had some compliance hurdles that we had to kind of clear there. I am still net long this market, and someone asked me in the meeting, what would I have to do to get net short? Because I am long, because it's a bull market. So that could be one of the things that we chat about today. Again, here's my position disclosure. Basically, almost entirely all longs with the exception of AMC. AMC had another technical daily breakdown, which we also spoke about. I am senior trader and registered principal with T3 Trading Group. I've been with T3 for over a decade. I've mentored well over 100 professional traders, currently managing a group that is over 100 professional traders, big into martial arts. I finally got back in the gym for some sparring the Friday before last. These young guys were all in shape, trying to kick my butt. I was definitely out of that type of shape. But you know what? I held my own pretty well. I had to pull some tricks out of the bag to make up for the fact that I wasn't in fighting shape anymore, but it felt great to be back in the gym for the first time basically in 2 years since COVID hit. I'm actually going to Madison Square Garden tonight. One of my buddies is fighting in a professional boxing event, this guy Chris Algieri, so that should be cool to get back and take advantage of things that we have here in New York. It's good to be back. Today I'm going to be talking about markets, trading, the usual stuff, and then I'm also going to talk about how you can join T3, how you can participate in the team a little bit. There's a number of ways that you can partake in the team. If you have any questions about any of this stuff, you're interested in being involved in T3, T3 Live, the virtual trading floor, having a professional account, whatever, here's my email address. Feel free to reach out. So with that said, let's go to the charts. There's a bunch of things we can talk about here. So first of all, interesting day today. I highlighted in yesterday's afternoon meeting that there were a couple warning signs that I was paying attention to at the market. In particular, I did not like the last 3 days of price action from the IWM. The Russell here, 222 is a key level in the IWM, which represents a lot of our mid caps, small caps, the reopening trade, the reflation trade. 3 days in a row, we had strong opening rallies followed by weak closes. It's kind of a concerning internal of the market, but we're still holding up on the sideways pattern, the consolidation pattern off of the low in July here that we kind of successfully called out. We're building out this wedge even further, honestly, as we tail back up today. Going to be interesting to see how we close. So kind of coming into today, the market was gapping up this morning. I told the team in the morning meeting today, let's kind of take a break on being aggressive this morning. I did not like, based on yesterday's weak close for the SPYs, Qs, and IWM, we closed really weak. I did not like the idea of chasing a gap up this morning. Instead, we spoke about key support levels to pay attention to. We spoke about 436 in the SPYs. 436 is the low of this very tight consolidation that's been going on for the second half of July into the beginning of August. So 435.99 is that absolute low. 21 EMA here on the daily chart for the SPYs is about 435 now. So 436, very key support level to watch for the SPYs. We also spoke about these two really important pivot lows as support for the Qs. So Qs right now are building out a bullish pennant. Again, it's a bull pattern, ladies and gentlemen. I hope I don't need to remind you, it's a bull market. 362.41 was the first spot that I kind of wanted to pay attention to, but it really extends all the way down to 360.16. You lose 360 in the Qs, and you got bigger problems as this bull wedge would then become a potentially failed bullish pattern, which could lead to a fast move to the downside. So we said for today's game plan off the open, less is more. Let's be patient. Let's not chase today's gap up. Again, let's go to the small time frame. Here's the Qs. You can see this is yesterday's close. So we gapped up small in the SPYs. We gapped up small in the Qs. We gapped up small in the IWM. So let's not chase this. Did not like yesterday's very weak close. Instead, let's watch the market and see how it handles support. So not surprising at all, 436 is the daily level. Not surprising at all that the low of the day today is 436.10, held perfectly. The only thing I would say is surprising is honestly the degree of the bounce here over the course of the last hour or so. When we held support and we bounced back to 438, I was telling the team in the VTF, I'd be happy, honestly, if we just digest the rest of the day and kind of go sideways after holding support. So seeing this extra move higher here, I wouldn't call it surprising necessarily because, like I said, we are in a bull market, but definitely exceeding my expectations for the degree of the bounce off of support. So we're in a little bit of a less is more type of trading session. I need the market to prove itself. We are in a bullish pattern here, but I want to see the market start clearing some key upside levels for continuation. And while we're below those key upside levels, I've got a lot of long swings on. My disclosure shows that. I am not in a rush to put on a lot more risk or a lot more new positions to the long side right now until and unless we start seeing some clear levels on the upside get passed. So 441 in the SPYs, I need us to get above, close above 441 in the SPYs. For Qs, we basically need to get above yesterday's high, which is 366.88. Then I'll start feeling a lot more comfortable about putting more risk on in the NASDAQ. For the IWM desperately needs a close above 222, not just trade above and fail like it did for 3 trading sessions in a row, which for me, this is, if anything, it's a warning sign. It's something to pay attention to. It's not a short signal in and of itself, but how come we keep rallying every morning in the Russell here above that key 222 and then rolling over and failing? All those were reasons for me to take a half step back on the market right now and just kind of manage the long positions I have. So like I was saying earlier, one of the teammates in the ProDesk virtual trading floor asked me in yesterday's afternoon meeting, hey Derek, what do you need to see? You got all these long positions on. What do you need to see to get net short the market? And the main thing I need to see is a short signal. There has been no shorting signal. And even if there is a shorting signal, for me that would probably just mean that I start putting shorts on with my longs. Which again, right now I literally only have one short on, it's just AMC. But initially, if I see some sort of shorting signal, and there's a number of different types of shorting signals that could come into the market. One could be a parabolic move to the upside leading to some sort of blow off top. Another could just be kind of a rollover of the trend where we, like a rounded top type pattern where we go from a pattern of higher highs and higher lows to a pattern of lower highs and lower lows. Again, that could potentially start if we start breaking some of those key support levels that we held once again today. But should that happen, it doesn't mean I'm jumping out of my longs necessarily. It means that I probably would start putting shorts on along with my longs. And if the market shows continued weakness, then I'll start getting lighter and lighter and lighter on those long positions. My long positions, for the most part, are all win-win situations. And this is one of the things that I'm constantly preaching to my team of professional traders that I work with. Your goal as a trader trying to make a living off the market is to consistently put yourself into win-win situations, which is the opposite of what most retail money, which is typically classified as the dumb money, does. What a lot of retail money does is they'll buy a stock because they think it's going to go up, and if the stock goes down, they don't have any game plan in place for risk management or money management. They just hope and pray, please God, let my position go back to the price in which I entered it so that I can exit it without a loss. That's a lose-lose situation. You are putting on risk, you are risking losing money in order to potentially make nothing by getting out just as soon as you're flat on the position. What we're trying to do here as professional traders is we are trying to put ourselves into win-win situations. So that position starts going in my favor, I want to risk the money that I've already made in order to potentially make more. When I have positions that are going in my favor, that's when I want to be greedy. That's when I want to increase my hold time. When positions are going against me, I want to be quick to get out. I want to be quick to take my loss. I want to be quick to move on, take that capital, and allocate it potentially somewhere else. So that's what we're constantly trying to do. So for me, for just about all my long positions here, I'm well in the money on those positions. So if this market starts rolling over, I have game plans in place for reward maximization where over time I might start getting stopped out of them. But I'm not just going to immediately exit my long positions. What I'll do is I will at first look to enter short positions based on the signals that I see. And then as I get stopped out of long positions, slowly I become more net neutral to the market, and then slowly I can potentially become actually net short, should that all come together. So that was one of the things I wanted to chat about for today. Is just kind of the current structure of the marketplace, and I thought that was a really good question that somebody asked me in the afternoon meeting yesterday, so happy to go over it. Or you could just watch yesterday's afternoon meeting. I think you can find it on YouTube. What I also want to talk about today is Hood. The Hood. Where the Hood at? Robinhood. There's so many fun little memes and comments from mainly from good old rap songs that we've been kind of throwing out there with Hood over the last few trading sessions. There's an awesome Instagram account. I should look it up so I can tell you guys which one it is, but it just shows like kind of crazy stuff that goes on in different neighborhoods, and the guys was like, what hood is this? Anyway, I know some of you guys know what I'm talking about. I want to talk about this Robinhood because I want to talk about IPOs in general a little bit with you guys. And I want to talk about why the IPO process, as it traditionally has been, is one of my biggest pet peeves in the marketplace. And I also want to talk about how the media has been talking about this Robinhood being a terrible IPO. It's not. They're saying this is the worst IPO of its size in history. For who? For who? I'll tell you who it's the worst IPO in history for. For the people who are IPO flippers as their profession. So, the way a typical IPO process works is there is an IPO price, right? You have these underwriters. The underwriters, by the way, are the big investment banks. Goldman Sachs, JP Morgan, Morgan Stanley, etc. Right? Those are the underwriters of traditional IPOs. And then they come up with an IPO price. Maybe the IPO price is $100. Like Duolingo just IPO'd recently. I believe the IPO price was $101. I believe. Someone should fact check me on that. We could even use this as an example. I use Duolingo every day, by the way. I am, I think, 409 days in a row into my Chinese lessons on Duolingo. I really like the app. I just don't like the company at this price. But your traditional IPO process, the way it works is you've got these big investment banks and they come up with an IPO price. Again, I think Duolingo was 101. And if you are a big client of the big investment bank, meaning you make them a lot of money with your commissions because they charge you egregiously high commissions, like even as a professional trader with T3, there is a commission cost for professional traders with T3 because you have direct market access. We're not selling people's orders out to HFT firms like Robinhood does or like Schwab does or like E-Trade does. So if you're a professional trader with T3, you get direct market access. I am choosing where to place my orders into the marketplace. I'm placing my orders directly onto the New York Stock Exchange, directly onto the NASDAQ, directly onto the other major exchanges. But we are charging a commission. The commission that you get charged if you run your orders through like Goldman directly or JP Morgan directly is huge. It's huge. So why would anyone be a client of those big banks and pay for ridiculously large commissions? Like commissions that should be, from the early 1990s or 1980s, back when you had to get on the phone and call a broker and there was 6 middlemen before you could get a transaction done, and you didn't even know that you bought the stock until 30 minutes after you called your broker. Why would you do that? Because they're going to reward you with allocations of some hot IPOs. That's why you do that. And I know people who are professional IPO flippers. They do business with the big banks so that they can get in at the IPO price and then flip the positions the very next day. So Duolingo is an example. I think the IPO price was $101. Where did it open for trading on the secondary market? It opened for trading at $141.40. $141.40. It's basically gifting you with 40% profit overnight just because you're a big client of the investment bank. But how about this? And this one honestly isn't too bad. But let's say, and there's been some really bad ones, like the Lyft IPO really comes to mind. Let's say that you're just a regular person like me who likes to use Duolingo, uses it every day. Well, you can't buy at 101. You decide to buy this as soon as it opens for trading at the secondary market, you're buying it at $141. You're buying it from the IPO flipper who got the allocation from the big investment bank, who just sold it for an immediate overnight 40% profit. It is such a BS process. And then the investment banks are incentivized to have the actual IPO price be lower than what it would be. That's bad for the company that's actually going public, because how come Duolingo, if this was really worth $140, wasn't able to raise money at $140 a share? How come they had to raise money at 101? So Duolingo raises less money for their IPO than they should. The regular mom and pop investor who uses the app every day and wants to come in, they can only buy this thing at $141. So they get kind of screwed also. And it's all to set up these people who are the big clients of the investment banks. It's like the ultimate rich getting richer scheme. And honestly, this Duolingo wasn't bad. It's kind of held up on its price. You can see right now it's more or less trading at the price in which it went to market on. But there's been so many. I mean, Lyft comes to mind here. Let's go to the weekly chart of Lyft's IPO. I don't remember the exact IPO price on Lyft. I want to say it was like $39. But again, someone fact check me on it. Let's just call it $40. They opened this thing up for trading on the secondary market at $87. Like 100% premium from the IPO price. The IPO flippers are flipping, making 100% overnight, and the regular person who maybe is a Lyft driver who wants to come in and own stock in the company that they work for to try to participate in that, they come in and they buy this on the secondary market from those flippers at these prices, and this thing goes down all day, but the media is going to call this a successful IPO. The media is going to call this a successful IPO. Look at this. It's garbage. But on CNBC, they're going to be talking about how, oh, it was up 80% on its first day. What a successful IPO. It went down from the second it opened. They call this a successful IPO. But Robinhood, which fine, did go below its IPO price, they say is the worst IPO in the history of IPOs of this size. It's ridiculous. It's not true. It's not true. Like, yeah, is it a super successful IPO? No. A super successful IPO would open at $38 at the actual IPO price, and then, close at 40 or 41 that day. That would be what I would call a successful IPO. So was it that great on its first day? It opens up 38, quick pop to 40, goes down to like 33.50, holds the previous day's low more or less the next day, works its way back up. Now, I mean, if you held this thing for 4 days, it's now a successful IPO. You could be in from $38 and now it's trading at 44. I am not a fan of Robinhood. I've been saying that for a long time. I do not like this scheme that the brokers are doing right now of free commissions. Because it's free commissions, it's just not free. And most people don't realize that. Most people don't realize that, when you don't have that direct market access, when your orders are getting sold out to HFT firms, you're not necessarily getting best price on your transactions. I'm not a supporter of that type of business model. I am a big supporter on what Robinhood is doing to try to democratize the IPO process so that regular people can actually have IPOs at the IPO price. The big thing to see is if they're going to be able to do that on a consistent basis in companies that matter. And I don't know the answer to that yet, but at least so far, you're trying to tell me, media is trying to tell me, financial media, that this Robinhood was a bad IPO, that this was a failure. First of all, I made money the first 3 days trading this thing to the long side. I made money day 1, I made money day 2, I made money day 3. I actually did not make money today because I thought that $38 was going to act as some resistance because it was the IPO price and traded below it. I thought there might be some people stacking offers at $38 to try to get out of their position after being out of the money a little bit. I was wrong. A couple of my teammates today actually in the virtual trading floor took the other side of my thought process though, and they were buying this thing through 38 and really caught this move, so congratulations to them. But I was able to make money in this thing to the long side every day coming into today. And you're trying to tell me this was a failed IPO. It had great volatility. It had great price action. It's nice and liquid. It never pulled back too much from the IPO price. And they worked to democratize the IPO process. This is the first thing I've ever found myself being a supporter of Robinhood for. And now it's trading at $44. Now it's trading at $6 above the IPO price. This is a success. Robinhood is a success. But by the way, if you wanted to short it, we were able to get a borrow here also. I've also been hearing that people were not able to get borrows on Robinhood. It was incredible to me how bearish the sentiment was on this IPO coming into it, because I actually think it's been great. So anyway, yeah, Phil, for real, for sure, on giving some comments here. Glad you have some shares. So I just wanted to talk about that a little bit because the IPO process, as my traders know, has always been a huge pet peeve of mine, just because it's a very unfair process to basically everyone, to the company itself that's going public, to regular investors who are not huge clients of the investment banks, who can't actually get in at the IPO price. And what Robinhood is doing here, and what they did with this, enabling just their regular users to be able to get allocations of stock, I think is tremendously commendable. So I guess with that said, that was kind of today's lesson for today. I wanted to talk a little bit about IPOs, obviously, along with the current state of the market. So let's talk a little bit about T3 Trading Group. Let's talk about T3 in general and how you can potentially become part of the team. So first of all, there's a number of ways that you can become part of my team. You can become a subscriber to the Pro Desk virtual trading floor. If that interests you, reach out to T3 Live, reach out to your T3 Live representative and let them know that you want to be a part of the Pro Desk. You can become a subscriber, or you can get free access by having a professional account or a retail account with T3 Trading Group. I've been a professional trader with T3 for over a decade. There are a lot of benefits to being a professional trader. There are also some headaches and some difficulties along the way. So, always happy to talk about both sides of the coin. But if trading is a passion of yours, if this is something that you want to get involved in on a professional basis, I really do believe that T3 has the best offering that's out there. We are one of the largest proprietary trading firms in the United States. We have hundreds of licensed professional accounts. We have physical offices throughout the United States, really on the East Coast, though we have pulled back a little bit from that. All of our offices have been shut down due to COVID. Everyone's been trading remotely with access to that virtual trading floor. That's what the team's been doing, and it's actually been going really well. You do have to become, this one of the downsides, you do have to go through licensing examinations in order to become a professional trader. You have to pass an SIE, Security Industry Essentials examination, and you have to pass a Series 57, which is the Professional Proprietary Traders examination. You also have to go through a background check, an FBI background check. You cannot be a convicted felon or declared bankruptcy in the last couple of years and join the company as a professional trader. Once the exams are passed, we can get started with trading. We actually have 4 different trading software options now. We've got Lightspeed, Tachyon, new one we just onboarded, Sterling Trader Pro, and Wolverine, also known as WEX. Personally, I've been using Lightspeed for over a decade. A lot of people have been using Tachyon for a long time as well, and swear by that software. As far as trading goes, we've got equities trading, we've got equity options, we've got futures, we've got options on futures. Personally, I'm an equities trader, but if any of this interests you, reach out to me and I can speak to you about it myself, or I can get you in touch with the right person. The reason why I'm an equities trader, not an options trader, I just like chatting about this because I get this on the phone from people a lot. I trade options in my retail account, and I'm interested in becoming an options trader on a professional basis with T3. I get it. If I was a retail trader, I probably would trade options as well, because the natural leverage that's inherent in the product can give you an advantage that you can't get just by having a reg team margin account and a retail account. As a professional trader, T3 gives me all the capital access I could ever want. So for me, I've always asked myself, why do I want to trade options, which are a less liquid product and subject to time decay, just for capital access, when again, T3 is already providing me all the capital access that I could ever actually want or need. New traders should be aware that we're here to help. We have pretty extensive training and development programs that you're going to have access to. There's a 1-month training program I developed myself. Daily morning meeting every day, daily afternoon meeting every day, the virtual trading floor. I'm working with a really strong team of traders. For the most part, everybody's really friendly in there, willing to help. So you're going to have access to all of the things that will help you to succeed. The way that I like to describe it is, as a trader with T3, we are going to provide you all of the tools that are necessary for success in professional trading, but it's going to be up to you to be the decision maker. So even though we're providing you the tools, success is still going to be on your shoulders. You will be required to fund your account with a capital contribution, and what we're able to do for our professional traders is we're able to give you capital access to trade with, also known as buying power. You could view it as leverage. So you basically start that capital access, the buying power, at typically 20 times your capital contribution for day trading and 8 times your capital contribution for overnight positions. So for example, someone who puts $50,000 into an account, we basically start by allocating them $1 million to work with on a day trading perspective and $400,000 on an overnight for overnight positions. And if you are an experienced trader, well, T3 is also a great place to be because you have a very strong balance sheet. If you're someone who wants to come in with $2 million into an account because you want access to $40 million, it's probably not a problem. Reach out to me. Happy to chat about what we can do for you. And you get access to all of this stuff for free if you get started with us now. The ProDesk virtual trading floor room that I run, the training program that I've created, you get access to Scott Redler, his virtual trading floor, Redler All Access. We are literally giving away thousands of dollars of stuff to our professional traders here at the company for no other reason than we want you to be as successful as possible. We're going to do everything we can, like I just said before, to make you successful. Now that means giving away some stuff for free. We're happy to do it because we want you to be the next trader who is here for a dozen years and is making money for himself or herself and making money for the company as well. So again, if any of this interests you, becoming part of my team, you can do it by becoming a ProDesk virtual trading floor subscriber. You can do it by getting a professional proprietary trading account with T3. You can do it by having a retail account with T3. If any of this interests you, reach out. You want to talk about trading in markets? Reach out. You want to talk about how I can't wait to get back to Idaho, Wyoming, and ski Jackson Hole and Grand Targhee this winter? You want to meet up there for some runs? Reach out. I'm a pretty busy guy, but I tend to be a pretty friendly person as well. Always happy to chat. So with that said, I'm going to jump back to managing my positions. Let's see what this market's able to do into the close. Let's see if this little midday rally is able to be sustained after we held support in the SPY so perfectly today. And I will see everybody next Tuesday, if I don't see you sooner than that. Again, I'm trying to get some of my afternoon meetings. We were able to do it yesterday, broadcast live into YouTube. Have a great rest of your day, everyone. Make sure to focus on your risk management.